What is up, everybody? Welcome back to the Russel Journal. My name is Russell, and this is my journal entry for Sunday, February 5th, 2023. Okay, a few things. One, these lights kill me. Just so you know, I have a disability. My pupils work backwards. Light really killed me. So I have my sunglasses on. I'll be putting them up and down. Doing the show, it's pretty exhausting. It's a pain in my ass with the light. So forgive it. You can see how bright they are. I can even see the reflection in the glasses, but it is problematic, the extreme light sensitivity. So forgive me. I normally wear them indoors. That's how sensitive my eyes are to the light, is extreme. And so we're gonna bear with me, and they'll be up and down because one computer monitor I have, you can wear the glasses, it doesn't have a problem. The other computer monitor has a lot of issues. So anyway, in the meantime, that allows everybody to that little announcement lets everybody get into the chat who may want to come watch the show or talk to me about this as we go. All right, so the usual rigmarole for this channel, things that you need to be aware of. One, I am a student. I am not a teacher. This is nothing more than a book report on market behavior. You should treat it as such, and feel free to go ahead and record or have a grade me in the comment section. Tell me how my report went. Okay. Anyway, that is that. Now, the three things that we are looking for on this channel are one, we want to reiterate this. The things that you are looking to hear from me as a student of the market and somebody trying to become a trader is, the results of my trading and my days. And A, I traded and respected my setup and I made money. B, I traded, I respected my risk level, and I lost some money or made some money, but I stopped out of a trade. And lastly, the last one is that there was no trade set up. I did not take a trade. Okay. That would be it. As far as goes. Those are the things that you'll be looking for to hear from me. This is a market prep episode where we're going to talk about being prepared for the market. And here we're really going to focus on a little bit of this chart behind me, talk about what's going on that chart, see if it does give us any indication as to what we might be looking for or what we can be expecting. Overall, we are reacting to markets here. We are not, we're not predicting them. No. Okay. So we're going to be very careful not to do that. There are some things that we want to prepare for, and that's stuff I want to mentally prepare for this week. Before I go any further, there's something I do want to show you. You do have some really amazing volume here along the bottom of this chart. Your slow stochastic is on the daily time frame, is embedded in overbought, but you are beginning to hinge down, and you're really, really cooked way up here in this top area. So the market may really need some time as far as like a cool down goes in order to see if this bull trend continues. We could come back to the trend somewhere in here. And so what this really opens the door for me is something that is inside of my trade setup, but it is a little bit out. One of the things I am going to be looking for this week is for the slow stochastic to lose its embedded reading, which will give you a run back to the mean, which is right around 399. So I will be looking to take a swing trade this week in the event that slow stochastic does come out of overbought with a price target at the mean. This will typically, because it's on such a long time frame, a daily time frame, it will probably be a swing overnight trade. I just want to let everybody know that is something that I'm looking at doing before I do it, so it doesn't seem like I'm just gambling out here. Okay, there is a method to this mayhem, and that's something that I wanted to point out, is that you're going to get a cool down. A cool down could mean a pullback here. And it does, because it is on the daily time frame. It could take longer. So I just want to be very clear about that one particular trade that I'm looking for. In order for that to happen, we definitely need to see this move out of we need to see that move out of overbought coming. And so, and your risk factor will be your entry. It's not going to be something that's going to be super, super complicated or super far out to grab a hold of. And the other thing is, I will manage a large portion of my risk with position size. I'm not going to buy 10 contracts and hold them overnight, maybe 2, maybe 4, something along those lines. Probably out of the money contracts. That will be something that I'm looking for. Pardon me. I'll be looking at out of the money contracts, but some stuff that I want to be very clear on the setup. 399 is really where the 18-day moving average is, but it is a moving average, so it'll be up over 400. I will not be looking to take overnight. I won't be targeting that as the strike. Okay, I will be looking for contracts 401s, 402s, 404s, something with inside of that frame work that. And then position size will depend on the range of 10 to 20% of my account right now. So that is something that I have that I'm looking for coming up to see if it happens. If it doesn't happen, that's fine. I'm not going to force that trade to happen, to manifest itself. It'll be fantastic. It'll be fine. Okay. So going into the week, again, really reiterating my idea that like discipline is absolutely the goal. Respecting the stop loss is the goal. Focusing on those things are the goal. The process of this is the goal. Now, there will be, what we don't want to do here is try and predict this chart, right? The one thing I can tell you is that when the slow stochastic loses the overbought reading, you can look for a move to the closest main moving average. Right now, the closest one is the 18, or on yours, it may be the 20 or 21, depending on what you're comfortable using. I use the 18. That is what my mentor Ira uses. And it seems to work very well. It seems to be just fine. You can go back and back test this on the chart at any point in time. From the bottom side to the top side, you can find that. And I will take you right here. We're going to go look at one particular instance of this. And I want you to see it. Okay. This is a thing that's really pretty cool. And again, it doesn't matter the time frame that you're looking at. You can see this on any time frame. And exactly where I want you to see this here is we're on the monthly time frame. You can see coming into the monthly time frame, our sell-off happened all the way down to the lower Bollinger Band on the 18-day on the monthly time frame. And then when you came out of that oversold reading, yeah, it took a few months for it to happen, but you made your way all the way back to the 18-day moving or 18-month moving average. This is a monthly chart, monthly time frame. Again, I don't know a lot of guys that trade on a monthly time frame. This is just something of very interesting. This is an interesting thing to me, that it really doesn't matter what time frame you're on. You tend to have these things happen. You tend to see these moves happen. So no matter what. So it is, again, this is just another way of me sort of confirming the back testing of this one trade practice. Okay. Now, again, it did take 4 months, 3-4 months for it to make its way all the way back to the 18-month moving average. And then you begin to see, again, the topping tail candle right there is indicative that you're going to get some pullback in that going forward. At the very least, one of the things I think that if you do back test on the monthly time frame, you can go back and see, and you can even come back over here, see this move up to the 18-month moving average. When we had that, the next candle was a very tight range candle relative to this one. So it's a smaller range of trading candles. And you can go back further on the chart. I've back tested this to about 10 different times throughout history. And you can usually see that the next month is a tighter range candle. So I will totally be expecting this to be a tighter range month. It's February, and you're really out of a lot of your catalysts. You got FOMC out of the way. You've got a few things you're going to have that can affect things. You will get some inflation data going into this month, but it's a short month. So again, I'm expecting a tight ranging month, not expecting a lot of really big moves and things of that nature. So where I will be looking for my setups at are, I'll be looking, let's go in here. Let's go to the 1 hour chart. I'm going to go ahead and go to a 1 hour chart. And you can go ahead and see some stuff on the 1 hour time frame that is pretty interesting. one, you can see this breakout level here around 412. That's going to be one that has been at a point of some real interest. The other one that you're going to look at is this one at 406 and a half. That was not 406 and a half. This one should be 406 and a half. Okay. So some of these things that are really interesting, and I'll go ahead and unmessy this chart. I'll get rid of the Bollinger Band, the MA and the Bollinger Bands. Okay. So again, you can see this around 406.50 here. So if you break below this 412 level and stay below it here, you can count on probably a move all the way back to the 406 level. And if you lose that, you can count on a move back into this 400. This will probably be closer to 403.5 than directly to 400. There is some trepidation in here. 403.5 definitely was a real tough zone as far as this goes. And I do have a point where it did test it back in here somewhere. So, so looking at that now, again, one of the things that can be very, very clear as far as our swing trade goes, if we get a daily candle closing around 406 and a half, your momentum will be lost. And so a move back to the $400 level can be that will lose your momentum. Okay. That will pull you out of overbought on the slow stochastic, and you can get the move back into the $400 level. So it seems like a very logical trade that can happen. Again, we're waiting for that. We need confirmation of those moves. Again, we need to break and hold below this 412 level. You can see in the after hours, you are below that, but that's not really going to matter. After hours trading overall doesn't affect this chart that much. So that's kind of what I'm looking for going into this week. As far as the good solid trades that I'm really looking for, the rest of it's all more or less, again, reaction, looking for buyers to step in and hold this market up. There is some stuff around the fact there's a lot of investors moving into calls. I watched some of Steve Van Meter's things where he talked about, he seems to think that you're going to have a FOMO rally where investors who have been waiting for things to look so bullish are going to start coming in. I don't know. Again, you have to wait for price action to confirm that as far as my education has gone on this matter. So again, not really expecting a lot in tomorrow. No real catalysts. Possibly some continuation to the downside. Come back to that 18-day moving average. There's nothing wrong with that. They don't lose the bull trend if they do that. It allows them to pull some money off the table, bring new liquidity in as far as that. So there's nothing really inside of that that's really that nasty. However, there are some other guys out there making predictions. I don't believe in the predictions anymore. I don't really do them. Again, all I'm saying is if you get this move, you'll get that move. Okay. It tends to work out that way. And it is back tested to about 95% accuracy as far as that goes. If you do lose the embedded reading, there is a chance that you can regain it in the following equal time frame. So let's say we lose the embedded reading let's say you come down here to this 406 level and you lose the embedded reading on the slow stochastic on the daily time frame that day. The next day, it could rally back up over to 412 and you maintain your embedded reading. So what you would be looking at this is a pullback into this 406 and a half to 407 level, and it will and you're looking for it to stay below that. Your risk level then becomes this range between 406 and a half and 407. So it's pretty simple, and it's a nice risk to reward ratio that 2 to 4 contracts could probably held overnight could probably print a pretty decent win for. I'm hoping for me. Again, assuming that I'm not targeting, if I'm targeting 400 as far as how far down I think it goes, as long as I'm buying like the 404s or 405 calls. So I'm not super far out of the money at that point. I should be fairly safe. So the one thing that will determine a lot of this is going to be the VIX relative to theta. So if this has high implied volatility going into this month, that could throw it off, in which case the amount of premium it may cost me to take the trade may be too high. So I may not get to take the trade just because the capital requirements are outside the range of what my account is supposed to handle. So those are the things that, again, that is really what I'm looking at going into this week from a technical perspective. I want to see that daily time frame lose that embedded reading. I'm looking for it to come into that 406 and close around there tomorrow or Tuesday in order to take that swing trade. I will be looking for a nice pop midday in order to take on a longer swing trade position from the short side. And again, I'll be using that 407 level as really a 407 to 406.5 is really sort of my trigger for that. Again, it can find support anywhere within inside of here. So we will use the stochastic on shorter time frames like the 5, 10, and 15 minute in order to establish whether or not that trade is viable. So that's what I'm looking at as far as it goes. Again, like I said, no real catalyst coming into tomorrow. I could go over and look and see real quick if there is anything big this week that we need to report on. Okay. We need to go to the calendar. So going over this week, what we have as far as catalysts coming out. There's an employment cost index on Tuesday, Case-Shiller home prices. There's the Chicago Business Barometer consumer. We get consumer confidence is on Tuesday at 10 a.m. That might have something. This is a weird one. If consumer confidence comes in and if the confidence is coming up, right? That does not bode well for the Fed. So we will see. One of the other things too is it has been speculated on that the Fed didn't get the result it wanted from FOMC. That is believed that the market took what Powell said the wrong way and they went up, and this is something Powell wouldn't want to see. I don't know if that's true. I really don't, and I fail to speculate on it. What I will say is if the Fed did not get what they wanted, right? If they didn't get the statement they wanted, then we will look for Fed speakers coming out, hitting the road, doing speaking engagements where they will be speaking more hawkishly. And so there could be that negative catalyst. If you don't see a lot of eyes on the Fed, if they're not doing a lot of speaking engagements throughout February, then it would probably be that the Fed is just fine with the S&P around 4,100, 4,200 level. That doesn't bother them. They don't think that's going to affect the wealth effect or stop, the inflation thing. One of the things that I think is very interesting about Powell is that I think he does believe that supply line shutdowns, I think he does believe in transitory inflation. I think he does believe that, right? And I think that he's very smart. I don't think that Powell is an idiot. I tend to think he's doing a good job. He's not stupid. And one of the reasons why I think he's really worked hard and pushed to get those interest rates as high as they are is because in the event supply lines open up and things get really cheap, that we have a deflationary recession. In the event of that, any recession at all, he needed room within that to lower interest rates again and ease. If he didn't have that, and he would have had, if he left it really where it was or moved much more slowly, he runs the risk of having to make interest rates go negative as far as some type of QE goes. And I don't think he wants to do that. It didn't work well for Germany, and it hasn't worked well really in a lot of financial markets. It's survivable, but it hasn't been great for a lot of the economies that have had to go negative. So I do think that there's a bit where he's thinking a recession is going to happen on either side or could have happened on either side, and he needed space to be able to bring QE back in. So I think that's a lot of what's happened here. I don't think it's really been that he really maybe even believes that raising those interest rates affect inflation that much. If you listen to Steve Van Meter very much, he will tell you that he doesn't think the Fed has much control over inflation. And that even furthermore, like for the whole entire 2020, Steve Van Meter's narrative was that quantitative easing is disinflationary because it allows for the creation of technology. Technology makes things cheaper and faster. And so through the advent of technology, we get cheaper products, not through anything to do with interest rates. So I don't know whether that's true or not. It sounds logical. It makes sense to me, but it does. It has made some things cheaper, you can look at any number of products and find out where an advance in technology. I remember when the Sony Walkman came out, it was like $100. And then I remember in 1996, I bought my first Walkman for like $10. So, technology definitely made that cheaper. Okay, so going on, let's look through this because we should have some CPI data coming out pretty quick. The jobless claims, productivity, unit labor cost, factory orders, core capital good orders. That will have something to do. Core capital good will have a big deal. No, this is all last week. Never mind. I messed that up. So coming into this week, nothing scheduled. We get the inflation expectations for January. Wholesale inventories on Wednesday. That's going to be big. Okay, because so there's been this in the market, there has been some trepidation around this narrative of a deflationary recession. Okay, I'm not saying that's what's going to happen, right? This is a book report on what I see in the market. Okay, there has been a narrative, and this has come from Cathie Wood. This has come from other economic advisors. This is even some of Powell, where the idea of transitory inflation. And what you begin to see when you have these inventories, the wholesale inventories, is if those inventories start to get larger and larger and they're not moving out, right? They're not selling down. Nobody's buying that inventory, that if it builds up too high, they will need to release the capital, so they will just start dumping. You will see a fire sale on different products. So there could be something here. I'm not saying there is or anything like that. We will see what the number is. I'm not predicting that it's going to be higher or lower or anything. I'm not that. I don't track that information other than when we get the report. So Wednesday, there could be some rocky stuff with that. Initial jobless claims, continuing jobless claims on Thursday. Again, you get the consumer sentiment report, and you get the Michigan inflation expectation. So I don't know that I'll see a whole lot of catalysts there that are really crazy. Again, could be something if it comes in line with if wholesale inventories come in line with predictions, then nothing probably. If they're one way or the other too much, you could get some sort of reaction in the market. Again, I don't think that as far as a catalyst goes, there's a possibility there. And in Thursday, again, jobless claim numbers on Thursday. Thursday is always Thursday. Jobless claims are always jobless claims. So we'll see how the market reacts to that. So other than that, that's going to do it for me today. The Russel Journal, written, edited, hosted by me, Russell Liss. We are produced by Social Media Shows. Our executive producer is Maria Pereza. So thanks to her. She could not do the show without her. And until tomorrow, just pretend I said some sort of catchphrase.
This show is brought to you by Michelle Kubiak with Berkshire Hathaway Home Services. If you're looking to buy or sell a home, call Michelle at 702-683-6576. Her license number is S.48606. This show is also brought to you by Hand and Stone Massage and Facial Spa, located on Silverado Ranch, here in Henderson, Nevada. Restore, relax, and refresh. Let's not forget our very own Meryl and Merrick comedy show. This fun, comical TV sitcom duo with Social Media Shows Network loves to make you laugh. Mahal Empire Productions. It's a filmmaker based in Las Vegas, Nevada. Founded by Michael and Sonny Mahal, and are dedicated to making feature films. Turn your power on with Broken Bulb Productions. Owned by Russel Rapp, an independent filmmaker based out of New Jersey. This show is brought to you by, let's not forget, our very own GI Connections. It's a nonprofit organization that connects veterans with resources. We're also proud to recognize Prolific Arts with Sonia Scott. Painting is the expression of emotion and feeling deep within one's heart. Let's not forget Matoma Environmental Technologies. Global research, development, and manufacturing of innovative photocatalytic products. Our show is also brought to you by Carmelo Rodriguez, who is the author of a best-selling book called Smile. It's based on true events. It's the story of a couple building a family. Get your copy of his book at Amazon today. We also love our musicians. Think about Frank's Tribute, an all-star band. It's a Green Bay-based band with Let Me Be Frank's Productions, family owned by Frank Hermans, who happens to be a veteran entertainer.